Hey, good evening, guys. This is Simon with Trade and Perform Coaching, and I wanted to share some of the homework that I do with people in the room and just people in general to kind of prepare for the following day. And one of the things about ES in terms of getting prepared for making money on a particular day is understanding what type of range and what type of price action we might have. So one of the ways that I do that is I go back and I look at the past 6 or 7 weeks of that particular day so I can get a picture of what those days look like. And the first thing I'm doing, so remember the reason for the homework is so that I can reduce my fear and anxiety and have a good idea of what type of price action to anticipate and what normally happens. Right now, no two Mondays or no two trading days are going to be identical, but they do rhyme. Monday tends to be one of the lowest volatility days of the week and the narrowest range of the week. Before I get started, let me do the quick disclaimer and we'll roll from there. Where do I have this hidden? Here we go. So, legal notice, important disclaimer and reminder for all traders and investors. This webinar is for educational purposes only and not a recommendation to buy or sell any particular financial instrument. Equities, futures, options, and currency trading have large potential rewards, but also large potential risks. You must be aware of the risks and be willing to accept them in order to invest in the futures and options market. Absolutely do not trade with money you can't afford to lose. This website is neither a solicitation nor an offer to buy or sell equities, futures, or options. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this channel. Past performance of any trading system or methodology is not necessarily indicative of future results. Absolutely consult your registered financial advisor and your risk trading plan before ever investing or trading any financial instrument. So, jumping back into it, one of the areas where I find people have anxiety, see if I can lift this up a little bit here. There we go. Where they tend to have anxiety is in trying to figure out what the day is going to do. Is it going to be trend day up, trend day down? Are we going to have a fast market or a slow market? So first of all, on Mondays tend to be relatively they tend to be balanced, right? And they tend to be slow and grindy. So what are the commonalities? So the first thing I want to do is I just want to get familiar, again, with what the look might be, because just like everything else, familiarity breeds comfort, right? And so we have enough uncertainty. You don't want to anticipate what's not going to happen. So I'm going to start back over here. This was the date we're currently looking on is, start right here, the 22nd of May. This is all the way back to April 9th. So let's just go back from April 9th all the way to last Monday, and we'll go through each date. I think I threw out Memorial Day, which obviously makes sense. So this is April 9th, and what you can see from last Monday is we opened up. The first thing that you'll notice, if we bring it in, this is London Open, right? And this is London High, London Low, and what you'll see is we opened up, we pushed out above London High and above Globex High in this case, which landed right over here. Consolidated above. You'll notice we consolidated all morning long, and it was slow and grindy, and it looked, right, if you see these first 3 bars here, it looked like open drive lower, but what you'll see is the tick got pretty negative in here, and we eventually rolled over. I don't know if there was news involved there, but we actually swept the entire range on the 9th, and then we came all the way back up, swept the whole range again. So this is balance, right? We're sweeping both ends, and we're checking up on prices on either end of the overnight range. And what you see here is that we ended up with balance, and you'll notice a couple of things. First, tick divergence into the low provided a fantastic trade back to the upside, and secondly, shorts did work, even though I'm generally a little opposed. Now a little opposed to shorting near the top third of the range. It's definitely not my favorite trade. Long side trades are definitely my favorite at this particular cycle of the market, right? So when we flip through here, so we know that we have balance on April 9th. Let's go back and look. We have April 17th. So the next thing you'll notice is, again, that we push above London High, which is comes in right before the open. And you'll see that once we drove above London High, the key there, if I go back and flip back and forth, the first thing I notice is, hey, when it was strong, right, never got back below London High. When it was weak, it tested below and closed below. And then the other thing that I'll notice is that when it pushed below London High and it closed back in, it traveled to the other end of the range. So the first thing I want to be aware of is if we get above London High and we close back in, the possibility of sweeping the range. That's what the last 2 Mondays tell me almost immediately from there. And also additionally, there's multiple tick setups here. When we did hold above and we started trending higher, and also the break of the IB high and the 50-60 retrace provided good trade location to the long side. Again, slow and grindy, took all day to push up for this move, although this was a very healthy move on April 17th. So continuing back, this is, again, I don't have the date, this is April 13th. This is US Open, right? And here you can see we had balance yet again. Here's London high, here's London low, and you can see we traded both ends. We traded up to London high, rejected, traded all the way down to London low, bounced off of that, attempted to trap below again, pushed back in, and then we actually sold off. This actually ended up being a very delayed trend day down. But remember, just so you have a picture of where we were trading here, I'm going to flip the chart here real quick, go to 30-minute. We were already trapped inside the range. So this context is different because we're currently at the very tip-top new highs, right, where these trend days down were occurring, right? And the other thing that I want to make sure that you see on this trade is when we go back to the 5-minute chart, is that even though we wow, hold on a second here, I lost it. Let's see, 17th, how did I lose that? 24th. So let's say we started here. We're at the 9th, balance, slow grind up, balance, true balance on Monday, April 24th. I must have been working it back from the other direction, right? You can see here we could not clear London high or London low. Slow grindy balance. Again, guys that are in the room, you'll understand what I mean when I say the tick entries were very good here, right? This is May 1st. Again, you can see balance, primary theme, right? So we're going to look on Monday the 8th. Again, what do we get? Balance, pushes at extreme, pushed back in, right? So again, what do we have here? We open drove higher. This was London high right here, and but even within the context of this London high, after we got past the first hour, which is right here, you can see that the market broke into balance. It looked like trend day up, right? But it ended up balancing after the first hour, right? And then again, when we come into the 22nd, which was 5:22, you can see again we opened up and we were above London high, right? So here's London high, right? So I'm going to go through this one more time. There's London high, there's London low. We were above London high. So again, this is one of the reasons why I'm against shorting when we're at the very tippy top of the market, because it can just grind up against you. But you'll notice the negative tick entries, again, constantly all the way through the day proved valuable, and it was slow and grindy. So I'm looking, so let's flash through that really quickly, right? Of all the days, right, going further back towards April 9th, right, we were sweeping the range but still having balance, right? We only had one day out of all those days where we had a trend, where we ended up closing trend down, and that was right over, how did I possibly lose that? Let's see. 1, 2, most of them were up, obviously. 3, balance. Didn't delete that. May have lost it. We had one day that, let's see here, this is the 22nd, 5:15, 5:8, 5:1, 24, 17th, and 9th. Okay, there we go. Those are the dates. So 5:22, obviously I left I know I skipped because it was prior Memorial Day. I don't know what we had, one trend day down there, but you can see the majority of these are push up, go into balance, right? Push up, go into balance. So I'm going to do this one more time. Push up, right? Above London high, negative push back in, failure to close back below London high, and then we grind back up the rest of the day really tight and balanced summertime type trading. Again, shorting very hard. That's the 22nd, right? So I know, why is that valuable? First thing I know, I expect it to be relatively slow and grindy, right? I know that if we're going to make a directional move, it's likely to happen in the first hour and then go into balance. And so I'm looking for negative tick entries to get me, since I want to trade to the long side, to give me long side entries. This does not mean I know what's going to happen tomorrow, right? I'm going to have to read the price action in real time, know where my support resistance areas are. But look at the similarities as we go through here. 1, 2, first hour, right? Open drive higher, break into balance, negative pushes down, result in rotations back up, right? Again, shorting is the difficult way here. Go to the next day. Again, we open up, London high, Asia high, London high, and look, you'd think like, wow, we opened up and we balanced all night and we were way off the Asian gap, right? It still just came in, pushed lower, gave us tick divergence right there at the low, and then pushed back up for balance. Again, my focus would be looking for long side trades to push up to the other end of the range, or if we open drive higher, right? So I already know I know this is not as organized. And the reason why this is not as organized is I'm literally doing my homework in front of y'all, right? So what this is telling me immediately is after the first hour, I'm looking for negative pushes down, negative tick pushes, tick divergence. I know that we have narrower ranges and that we are oh, hold on one second. Wow, I apologize. My wife texted me. I lost my focus. So I know two things. I know that I expect balance after the first hour. I'm looking for negative tick pushes to give me entries in the afternoon, right? And I'm missing one other piece. Oh, even when we did open drive higher, we went into balance on most days. That there was very few drives down, right? Really doesn't matter which day I look at. We have some variation on balance, right? And oh, there was the day right there. This was the only day where we really drove from one end of the range to the other end of the range. And you'll notice again that occurred once we trapped back into London high, and you'll also notice that once we pushed to the low, first of all, this was the rarity, but even then, if you watch for the push down for negative entries, I want to point out, so I'm oversimplifying here, there's more to the read here, but negative tick reading, counter rotation, and finally tick divergence gave pushes back to the upside. I'm not really interested in finding a way to short this for any particular reason here in the last hour, and the reason for that is if you go through each of these days, you can see that many of these days ended up breaking out and closing at the high of the day, and that each push down into negative territory really gave a long entry. And so these are, when we're not getting enough rotation to get to key locations on the chart, these become alternative entries for long side trades, right? With, as long as you have a reasonable stop, and really most of these trades made sense from a structural standpoint once you broke Globex high, Globex low, tick divergence, and where the prior volume points of control and the high volume nodes are. Once you break that into the charts, it makes a lot of sense. So going into tomorrow, right, what am I expecting? Well, I have plenty of evidence. I'm expecting balance, so I don't have to overthink it. The only place where there really appears to be significant danger is if I get above London high, respect that first hour push up, just wait till we get out of that first hour and start looking for negative pushes down into negative tick territory for long counter rotations back to the upside. What would change this scenario? So a couple things would change this scenario that I would have on my checklist, right? So the first thing that would change this scenario with regards to having a balance day on Monday, right, would be a gap down and open drive lower. But even with that being on a Monday, I would expect it to break out into balance after the first hour. So I'd still be looking for long side entries. The market's is very much in a buyers are in control mode, right? If I see a significant expansion in range in the first hour, right? Again, you'll notice some of these ranges are very tiny, like this whole move is 5 points, right? If you look at each of these mornings, this move here was 2390 up to, 2392 up to 2400, 8 points, right? If you look here, this whole move in the first hour was approximately 23.98 down to 23, well, not even 23.90, it was 23.92, 6 points in the first hour, right? If you look on this particular day, in the first hour, we rolled from 23.86 down to 23.81, 5 points in the first hour, and got responsive buying, right? I'm not looking for big rotations in the first hour. This whole thing appears to be less than 3 points in the entire first hour, right? If you look from high to low there, what you'll see is from 23.72 to 23.66, 6 points. A negative 600 tick gave a long location, right? If we look again here, the whole range in the first hour here was 23, let's call it 29, up to 23.38, 7 points approximately in the first hour, and it was all upside again, still looking for long side trades. So I know when I come in, right, I don't want to fade the first hour. There's very few days where we actually pushed down in the first hour. There was a few of them, but not many of them. What I'm looking for is a push down, a negative 600 tick entry, negative 800 tick, pushes into key support areas, which have been more difficult to get, right? And now I can relax my mind because I already know there's no point in me looking for fast action when I can already tell the rollovers are taking from 8:30 till, all the way from the time we reached the peak at approximately after 9 a.m., all the way till 10:30 to reach a low. From the time we swung back up to retest that high, took from 10:30, where we consolidated for almost an hour down there between 10 and 11, and it took a full 3 hours to rotate from 86 all the way back up to 74. But there was an 8-point trade available in there, right? And I think that's going to be consistent all the way through here. Slow, grindy, negative tick entries in this environment are pain. And so what's my safety valve? What's my safety valve in this situation? Let's say we get into a situation like this where we break above London high, push, and roll all the way down. Well, a couple of things. First of all, notice that even when we did bounce and we started to move lower, we couldn't, we weren't quite at a negative 600 tick. And you can't ask for perfection, I guess is the other point, right? So what I'll find is a lot of traders are working to avoid this, and I don't know if there wasn't a key HVN or what. This really looks like there was some type of news that swept through this area. And now if I remember this date, because I think I do, I think there was some fake Syrian news that came out on this, and you can see that it's fake because the market came right back up and re-auctioned this territory all the way back up to the high, right? And that's what your stops are there for, not trying to overthink it, right? So again, overwhelming amount of evidence. Balance, balance, negative ticks, give great entry. Balance, negative ticks, giving great entry. Balance, negative ticks, giving great entry. Balance, balance with an upside bias, strong upside bias again. Negative tick, giving great entry. And again, balance, negative tick, giving great entry. So anyways, my name is Simon. I'm a Trade and Perform Coaching. This is part of what I do for my homework to get ready for the next day so that I understand what type of market I'm looking at. I'm familiar with the look before I get there. And now I have a much more calm demeanor. I know that generally sidestepping the first half hour and waiting for the tick to get negative in this market environment is going to give me some good trade entries. And now it's just a matter of executing and grabbing those trades and letting the market do its thing, rolling back to the upside to give me my profit. So anyway, my job is to help move traders from boom bust traders to consistently profitable traders. And so the first step in that is recognizing what you're looking for, developing a process, a checklist for entry of your trades. Excuse me, I apologize. And, trading, guys, I want to leave with one last note here, which is trading is hard, right? It requires preparation. It requires that you come in Sunday evening and take a look at what you are. It requires that you look at what you're going to expect, how you're going to follow your process, and it's also, look, fear is part of trading. I don't think you can ever completely get rid of fear in your trading, but what you can do is know that your process has a high odds of success and follow that process through and through all the way to the end. Let's say I came in tomorrow and I took these negative 600 ticket entries at location, right? And they swept through me. Let's say they gave me a complete stop, like a situation here where I took a trade and it stopped me and I took my second trade, and let's say it never bounced, it kept going, right? Well, that's what my 2 back-to-back stops are there for, because on most days that doesn't happen, right? By adhering to the discipline of using my stops, by understanding the nature of how the market's likely to trade, I have the advantage on my end. If I happen to get into a day where I'm either having an off day or the market just has random news like this that hits it, my stop is there to protect me, right? And other than that, I'm going to work those negative tick entries to get long side location, and most importantly, right, I'm going to assume that the market's going to attempt to balance out of all these days, unless we were holding above London high, right? So you'll notice Trent, we pushed to close near the high if we were above London high, but if we were not holding above London high, we closed near the high, right? Inside London, we actually still closed near the high, but it was inside balance, right? Again, above London high, once we closed back in, you'll notice that those strongest days where we were above London high pretty much out of the gate and held and never came back in. Not the case in this situation. And then the other thing I know is really, I don't want to press shorts, right? Because I don't want to get caught in a situation like this. I'm looking for long trades at this point in the cycle, right? I'm not against shorting the market. I'm just about shorting it at the right location. So I hope this helped, guys. Don't be fearful of trading. Instead, be willing to put in the work to build your process. Understand what your reactions are going to be and what kind of fears you're going to have when you're entering that trade, and have that process and that checklist to overcome those fears so that you can execute properly. Anyways, my name is Simon. I'm a Trade and Perform Coaching. This portion of my homework is done. I've got to go do some journaling now, so I will talk to everyone tomorrow. Have a great night.